Greetings, members, one and all of the Salivation Nation. Gold's role in central banks continues to shine. Let's explore. That headline should really be of no surprise to many of us watching this video. In spite of a hyper-digitization of the economy these days, our monetary system is essentially under threat of being wholly dependent on a digitized monetary platform. What does that mean? Well, there's talk of this great reset, which has implications that go far beyond the monetary, and essentially it's a movement more towards a global system of wealth redistribution. There's a revaluation of debt. There is a digital ledger, kind of like what we're seeing with the cryptocurrencies out there, this time sanctioned by governments around the world. And that is something that really threatens things such as the dollar in its form that you see here in terms of just being currency. This dollar bill you can take and you can spend pretty much anonymously. There is that power of cash, even though it's backed by nothing except for the United States of America and the private institution that is intertwined with the public and many other entities, the Federal Reserve System. But make no mistake, also gold being the asset that one may feel could be under threat if we move into this digital system. But it should be abundantly clear that it does play that important role with central banks' foreign reserves. We're going to take a look at that through the lens of a white paper written by the Bank of International Settlements. I'm sure you may have heard me talk about the Bank of International Settlements for quite some time, even before the bank itself listed gold as a Tier 1 asset. The Bank of International Settlements being the central bank of central bankers, it is the ultimate kind of authority of money out there. You have organizations like the International Monetary Fund, but really the authority lies with the central banks. And what do many central banks around the world have in the reserves? Well, lots of cash. That's right. Cash is a Tier 1 asset. And cash is relegated by the IMF's reserve currencies. 6 nations have the top world reserve currencies, with the dollar being at the very top. And what have they done since April of 2019? They listed gold as a Tier 1 asset, a game changer for sure. In this article here from Kitco, we're going to talk a little bit about this, and I think you're going to find something quite interesting and fascinating and recognizable. For a lot of the same reasons why central banks hold gold is why you and I should hold this yellow metal. That's right, gold. It is an alluring metal for sure. It is indeed money distributed and used as a form of exchange between central banks, but also, and it has been for millennia, for thousands of years. It is not used in exchange for many of us here for the general public, but there are times and cases, exceptions, where it has been used. In fact, there are certain states here in America that have begun to accept for exchange RM notes. These are gold foil notes, such as the Utah and Nevada gold backs. Other states are taking that into account. But nonetheless, it's starting to make a comeback, and it's showing that it is important to be able to have gold in your portfolios. So gold's role in a nation's foreign exchange reserves is not expected to diminish anytime soon, according to a recent working paper from the Bank of International Settlements. In a recent research report from the Bank of International Settlements, analyst and author Omar Zulaika said that determining the amount of gold in a reserve portfolio is not a trivial matter and depends on the purpose and implementation of the reserve management. Zulaika suggested in his report that the current environment, central banks could continue to add to their gold reserves. Zulaika noted 5 key findings in his research into gold as a reserve asset. First, the negative market news. He noted that from a market perspective, because gold's volatility doesn't do well in a low-duration reserve currency fixed income portfolio. And boy, it has been volatile as of late. In fact, as of the recording of this video, it is heavily weighted in that volatility to the downside. An increase in duration of gold can have a positive effects on a portfolio, however. For higher durations, gold can provide an effective hedge against a portfolio's sensitivity to changes in yields. This is evidenced by increases in portfolio duration beyond 2 years, which can give support to gold holdings above 10% of total FX reserves on average, he noted. Zulaika added that gold is an important diversification tool, not just in the long term, but for nations that don't have reserve currency status and high volatility. He noted a 20% position on average in gold might be optimal in cases where the numeraire is a commodity currency or one from an emerging market economy. Does this sound familiar to you? It should, because a lot of these uses by central banks and reasons to hold gold and why it's so important, diversification, being able to guard against volatility and the like, and from a market perspective, these are reasons why private individuals are encouraged to hold gold as well. As global economic conditions deteriorate, Zulaika said that 20 to 50% position in gold as a rainy day fund may be adequate in the presence of elevated yield sensitivity or an exchange rate risk. And that's interesting. You've heard me talk about previously on this channel why some feel 35% is a good number to have in gold, a percentage of your portfolio to have in gold. And I'm not comfortable necessarily going there and advising my viewers on that. I'm not a financial advisor, but I am smart enough to know that gold is a great way to hedge against economic instability, and that's why I hold a position in gold for sure. But this Zulaika is saying for these central banks, having a 20 to 50% position in gold is good as a rainy day fund. And here's another thing that is quite an interesting word that we use here for those of us who are private holders of this shiny yellow metal. Insurance value could lead to higher allocations in a reserve portfolio, particularly in the current low interest rate environment. Boom. Central banks. That's right. The Bank of International Settlement suggests for central banks to hold gold as an insurance value. Isn't that something? That's right. And what does that tell us about gold? Gold is a metal that goes beyond governments and goes beyond organizations, both global, national, or local. That's right. Gold is what it is and serves the same purpose no matter what, no matter where and how it's utilized. And now you know why many of these central banks are adding to it at record paces this time. And even though right now, as of the recording of this video, the price for gold is down fairly substantially by a couple $100 from its all-time high. But it's still valuable. It's still valuable. That's right. Zulaika said that gold's role in a portfolio also goes beyond the traditional risk-reward evaluation. He explained that there are intangible benefits that go beyond FX reserve diversification that aren't easily captured by standard metrics. The possibility of large-scale adverse non-financial events may lead to further reflection. For example, a major war, a period of very high inflation, or, speaking to more recent events, a systematic cyber attack or a global pandemic may give central banks enough reason to hold on, if not add, to their bars of gold, he said. Indeed, in highly adverse scenarios, a country's stock of the precious metal could be one of the ultimate means to ensure confidence in the stability of its finances. The relatively high gold allocations observed in practice, therefore, may be a measure of the importance attached to these border considerations within the reserve management community. There's more to gold than risk and return. Extremely valuable to understand. During World War II, we saw a lot of risk of European nations' wealth being confiscated by Nazi Germany. The Third Reich marching through at record pace, so they had to get rid of their gold and move it out of country in record time. It was priority number one to preserve the nation's fiscal situation. And so what did they do? They moved that gold out. And they did so at an amazing pace, really with providence to be able to do so. Gold, an amazing metal for sure, and it is one that will continue to shine in importance between central banks around the world and also for us as individuals. Lessons to be learned for sure. If the central banks are holding and storing gold or stockpiling or hoarding it, with the negative connotation of hoarding something as if it was a bad thing, I'd say it's a good thing for you and I to hold on to this precious metal, gold. An amazing metal for sure, one that will continue to shine on for generations, for millennia, thousands of years from now, no matter what happens. No matter how much they digitize this, that, or the other, they cannot digitize, they cannot print, they cannot manufacture gold. It can only be refined, purified, and extracted. That's it. And reformed into a different element or different shape, such as these bars you see here before you. Gold. It really is something else, and I am convinced now, more than ever. Well, I didn't need much convincing before, but this is one reason why I have certainly shifted to more of a focus on gold, and with the understanding that no matter what happens to the price, the value is preserved and will be for many, many years and generations. And that's why that doesn't bother me. Even if I've spent, more money on gold when it was high and the price is going down, it's okay by me because I measure my wealth in ounces, not dollars. And that's really the bottom line. And that's what these central banks are doing as well. So I would encourage you to take stock and comfort in knowing that these central banks around the world, they are adding to their reserves. And the United States of America is as well. Well, at least they're holding on to theirs. They're not adding more, but they're not selling either. And so it is something that as we continue through life and an accumulation phase, as we acquire more ounces or even tenth of an ounce at a time for gold, you are empowering yourself. You are essentially being your own central bank, and that is empowering for sure. And with the central bank of central bankers, a white paper on this, recognizing the role of gold, not only as a Tier 1 asset as of April 2019, but also understanding in this white paper how important this role is in the age of digitization. So therefore, we shall press on, we shall hold on, and we will be sit back and see what happens to our financial situation, our economic situation, our monetary situation as a nation and as the whole world. And we know that no matter what happens with any of those three entities I've just mentioned, holding gold is a wise move to protect yourself in times of uncertainty, and no matter what. And it is there as a highly liquid asset that we can liquefy at any point in time for an emergency purpose or what have you. So therefore we shall do that. So I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.